Rebecca, a 34-year-old restaurant owner, was seeking working capital when she encountered a lender that would test her knowledge of legitimate business lending and teach her valuable lessons about advance fee business loan scams. She responded to advertising promising guaranteed approval for small business loans regardless of credit history. Rebecca's family restaurant had been struggling with seasonal cash flow issues, and she needed $45,000 to cover inventory purchases and employee payroll during the slower winter months when tourist traffic decreased significantly. The lender, National Business Capital Solutions, advertised guaranteed approval. Bad credit okay. Get business funding in 48 hours, which seemed ideal for her urgent cash flow needs and challenging credit situation from previous business struggles. Rebecca completed an online application and received an immediate call from business funding specialist Wilson, who congratulated her on pre-approval for a $45,000 business line of credit with flexible repayment terms. Ms. Torres, your restaurant qualifies for our Guaranteed Business Funding Program designed specifically for hospitality businesses facing seasonal challenges, Wilson said with apparent industry expertise and seasonal business understanding. We specialize in providing working capital for restaurants and other tourism-dependent businesses that need flexible financing solutions. Wilson explained that the funding approval was guaranteed but required a processing fee of $2,850 to cover underwriting costs, legal documentation, and coordination with their institutional lending partners who provided the actual business capital. Ms. Torres, business lending involves complex underwriting and legal documentation that requires specialized processing. Wilson continued with apparent business lending knowledge and documentation expertise. The processing fee covers all costs associated with preparing your funding package and coordinating with our institutional partners who provide the actual capital. Wilson promised that Rebecca would receive her full $45,000 funding within 48 hours of paying the processing fee, and that the fee would be deducted from her first business loan payment to ensure she received the complete funding amount. Rebecca was hopeful about the guaranteed funding but was cautious about paying such a large processing fee upfront and wanted to verify the lender's legitimacy before making the payment. I'm interested in the funding, but I want to research your company before paying the processing fee, Rebecca explained to Wilson. Can you provide references from other restaurant owners who have received funding through your program? Wilson became urgent when Rebecca requested references, claiming that business funding had limited availability and that delays could result in losing her guaranteed approval before other applicants claimed the available capital. Ms. Torres, business funding operates on a first-come, first-served basis, and we have multiple restaurant applications competing for limited capital availability. Wilson insisted with apparent funding scarcity and competitive approval processes. If you don't secure your funding today, your guaranteed approval will expire and be offered to other qualifying restaurant businesses. Wilson also claimed that National Business Capital Solutions was a private lending network that maintained client confidentiality and couldn't provide specific customer references without violating privacy agreements with funded businesses. Rebecca felt pressured by the funding deadline but decided to research business lending practices before paying the large processing fee to an unfamiliar lender. Rebecca contacted the Small Business Administration to verify legitimate business lending practices and learned that reputable lenders never required large upfront fees for loan processing or approval. Rebecca also researched National Business Capital Solutions online and discovered numerous complaints from business owners who paid processing fees but never received promised funding from the company. Rebecca realized that National Business Capital Solutions was operating an advance fee scam by collecting processing fees from desperate business owners who never received actual funding despite guaranteed approval promises. Rebecca contacted Wilson to inform him that she had discovered the advance fee scam, but found that the phone number was disconnected and that the company had no legitimate business registration. Rebecca reported the business loan scam to the Federal Trade Commission, the Small Business Administration, and her state's Attorney General office. She learned that advance fee business loan scams were common and targeted struggling businesses. The authorities explained that legitimate business lenders earned money from loan interest and fees after funding, not from upfront processing fees collected before providing any actual capital. Rebecca obtained legitimate working capital through an SBA-approved lender that provided actual funding without requiring upfront processing fees, helping her restaurant manage seasonal cash flow challenges. The experience taught Rebecca to verify business lender credentials through official SBA resources and to be suspicious of lenders requiring large upfront fees for guaranteed approval claims. Rebecca now educates other restaurant owners about advance fee business loan scams and emphasizes the importance of working with SBA-approved lenders rather than paying processing fees to companies claiming guaranteed business funding. Thomas, a 41-year-old construction contractor, was expanding his business when he encountered a broker that would test his understanding of legitimate loan brokering and teach him valuable lessons about fake business loan broker scams. The broker claimed exclusive access to private investors willing to fund construction projects. Thomas wanted to purchase additional equipment and hire more workers for his growing construction company, requiring $75,000 in business expansion capital that traditional banks had been reluctant to provide due to the seasonal nature of construction work. The broker, Elite Business Funding Partners, advertised private investor network, alternative lending for businesses denied by banks, exclusive access to construction industry funding, which seemed perfect for his banking challenges. Thomas spoke with senior investment broker Martinez, who immediately claimed that Elite Business Funding Partners had exclusive relationships with private investors who specialized in construction industry lending and understood seasonal business patterns. Mr. Campbell, our private investor network specializes in construction industry funding because we understand the seasonal challenges that traditional banks don't appreciate, Martinez said with apparent construction industry knowledge and investor specialization expertise. These private investors focus on equipment purchases and workforce expansion that banks often reject due to conservative lending policies. Martinez explained that private investors required more extensive due diligence than bank loans, and that Thomas would need to pay a broker fee of $3,750 to cover investor presentation costs and legal documentation required for private placement funding. Mr. Campbell, private investor funding involves comprehensive business analysis and legal documentation that requires specialized broker services. Martinez continued with apparent private placement knowledge and legal requirement expertise. The broker fee covers all costs associated with preparing your investment package and presenting your construction business to our exclusive private investor network. Martinez promised that Thomas would receive multiple funding offers from interested private investors within 1 week of paying the broker fee, and that the investors typically provided better terms than traditional bank lending. Thomas was interested in private investor funding, but wanted to understand the specific investors and their track record before paying substantial broker fees for introduction services. I'd like to know more about the specific investors and their previous construction industry investments, Thomas explained to Martinez. Can you provide information about successful funding they've provided to other construction companies? Martinez became evasive when Thomas requested investor information, claiming that private investors maintained strict confidentiality and that detailed investor information was only available after paying the broker fee and signing confidentiality agreements. Mr. Campbell, private investors require strict confidentiality protocols that prevent us from sharing specific investor information until you've completed the broker agreement and confidentiality process. Martinez insisted with apparent confidentiality requirements and privacy protection procedures. This confidentiality is essential for maintaining investor relationships and ensuring continued access to private construction funding. Martinez also claimed that discussing specific investors without proper confidentiality agreements would violate federal securities regulations and that legitimate private placement required following established broker protocols. Thomas felt suspicious about the confidentiality claims, but was pressured by his equipment purchase deadlines and Martinez's assurance about exclusive investor access for construction industry funding. Thomas decided to research private investor lending and securities regulations before paying broker fees for investment services that seemed to lack transparency about actual investors. Thomas contacted the Securities and Exchange Commission to verify private placement procedures and learned that legitimate investment brokers must be registered and that investor confidentiality didn't prevent providing basic information about broker credentials. Thomas also discovered that Elite Business Funding Partners was not registered as an investment broker and that private placement scams often used confidentiality claims to avoid providing verifiable information about actual investors. Thomas realized that Elite Business Funding Partners was operating a fake broker scam by collecting broker fees while having no actual private investors or ability to arrange the promised construction industry funding. Thomas contacted Martinez to inform him about the unregistered broker status, but discovered that the phone number was no longer in service and that the company had no legitimate business address or registration. Thomas reported the fake investment broker scam to the Securities and Exchange Commission, the Federal Trade Commission, and his state's securities regulatory agency. He learned that investment broker scams often targeted business owners seeking alternative funding. The authorities explained that legitimate investment brokers must be properly registered and that private placement funding involved verifiable procedures rather than advance fee collection with confidentiality excuses. Thomas obtained business expansion funding through an SBA lender that provided actual capital with transparent terms and proper regulatory compliance, enabling his construction company growth without paying fraudulent broker fees. The experience taught Thomas to verify investment broker registration and to be suspicious of brokers claiming exclusive investor access while refusing to provide basic information about their credentials or investor network. Thomas now educates other contractors about fake investment broker scams and emphasizes the importance of working with registered professionals rather than paying fees to unregistered brokers claiming exclusive private investor access. Patricia, a 29-year-old marketing agency owner, was seeking startup funding when she encountered a lender that would test her knowledge of legitimate asset-based lending and teach her valuable lessons about equipment financing fraud targeting creative businesses. The lender claimed her computer equipment qualified for substantial business loans. Patricia's digital marketing agency needed $25,000 for software licenses, additional computer equipment, and marketing campaigns to compete with larger agencies. But traditional banks wanted more collateral than her existing computer equipment could provide. The lender, Tech Equipment Business Loans, specialized in asset-based lending for technology businesses and claimed that Patricia's existing computer equipment could secure a $25,000 business loan with immediate approval and funding. Patricia spoke with asset lending specialist Johnson, who immediately assessed her equipment value and claimed that her computers, servers, and software represented sufficient collateral for substantial business lending. Ms. Rodriguez, your technology equipment portfolio represents excellent collateral for asset-based business lending, Johnson said with apparent equipment valuation expertise and technology business knowledge. Marketing agencies typically have equipment values that qualify for significant business loans through our specialized tech equipment lending program. Johnson explained that tech equipment lending provided faster approval than traditional business loans because the equipment served as collateral, reducing lender risk and enabling immediate funding for qualified technology businesses. Ms. Rodriguez, asset-based lending using technology equipment provides immediate approval because the equipment value secures the loan and eliminates the lengthy business analysis required for unsecured lending. Johnson continued with apparent asset-based lending knowledge and approval speed benefits. Your equipment portfolio qualifies you for immediate funding without the business plan requirements and financial history analysis that traditional lenders require. Johnson offered to arrange a $25,000 business loan secured by Patricia's equipment for an origination fee of $1,250 that would be deducted from the loan funding, leaving her with $23,750 in working capital. Patricia was interested in asset-based lending but wanted to verify her equipment values independently before using them as collateral for business loan obligations. I want to get an independent appraisal of my equipment before using it as loan collateral, Patricia explained to Johnson. Can you recommend qualified appraisers who can verify the equipment values you've assessed? Johnson became dismissive when Patricia requested independent appraisals, claiming that tech equipment business loans had certified appraisers and that external appraisals were unnecessary for their streamlined lending process. Ms. Rodriguez, our certified equipment appraisers are specifically trained in technology equipment valuation for business lending purposes, Johnson insisted with apparent certification knowledge and specialized appraisal expertise. External appraisals would delay your funding and aren't necessary because our appraisers understand current tech equipment values better than general business appraisers. Johnson also claimed that independent appraisals would cost several $100s and would likely result in lower equipment valuations that would reduce Patricia's loan approval amount. Patricia felt pressured by Johnson's claims about reduced loan amounts, but decided to research equipment values independently before pledging her business equipment as loan collateral. Patricia contacted computer equipment dealers to verify current market values for her technology assets and discovered that her equipment was worth significantly less than Johnson had claimed for loan collateral purposes. Patricia also learned that legitimate asset-based lenders typically required independent appraisals and that inflated equipment valuations were common in equipment lending scams designed to create loan obligations that exceeded actual collateral value. Patricia realized that tech equipment business loans was using equipment valuation fraud to create loan obligations that her equipment couldn't actually secure, potentially putting her business assets at risk. Patricia contacted Johnson to inform him about the inflated equipment valuations, but Johnson claimed that their specialized technology lending used different valuation methods than retail equipment dealers. Patricia reported the equipment lending scam to her state's lending regulatory agency and the Better Business Bureau. She learned that equipment financing scams often targeted technology businesses with inflated collateral valuations. The authorities explained that legitimate asset-based lending required accurate collateral valuations and that borrowers should verify equipment values independently before pledging business assets as loan security. Patricia obtained business funding through a legitimate SBA lender that provided transparent loan terms without requiring her to risk her essential business equipment as collateral for inflated loan amounts. The experience taught Patricia to verify collateral valuations independently and to be cautious of lenders claiming specialized expertise while refusing to allow independent asset verification. Patricia now educates other marketing agency owners about equipment financing fraud and emphasizes the importance of independent asset appraisal before pledging business equipment as loan collateral. Michael, a 37-year-old trucking company owner, was seeking fleet expansion capital when he encountered a lender that would test his understanding of legitimate commercial vehicle financing and teach him valuable lessons about vehicle title loan scams targeting transportation businesses. The lender offered immediate cash using his existing trucks as collateral. Michael needed $80,000 to purchase additional trucks for his growing freight business, but wanted to avoid traditional bank loans that required extensive business documentation and lengthy approval processes that could delay his expansion plans. The lender, Commercial Vehicle Capital, specialized in using existing fleet vehicles as collateral for immediate business expansion funding and promised quick approval without requiring detailed business financial analysis. Michael spoke with Fleet Finance Manager Davis, who immediately offered to provide $80,000 in business capital using Michael's existing trucks as collateral while allowing him to continue operating the vehicles for his freight business. Mr. Peterson, your existing truck fleet represents excellent collateral for immediate business expansion capital, Davis said with apparent commercial vehicle expertise and fleet valuation knowledge. Transportation businesses can access immediate funding using fleet equity while maintaining full operational control of their vehicles. Davis explained that commercial vehicle title lending provided faster funding than traditional equipment financing because the vehicles served as immediate collateral and the lending process focused on asset value rather than business credit analysis. Mr. Peterson, commercial vehicle title lending eliminates lengthy business analysis because the fleet value secures the loan and provides immediate collateral assessment. Davis continued with apparent title lending benefits and approval speed expertise. You maintain full use of your trucks while accessing their equity for business expansion capital. Davis offered the $80,000 loan with monthly payments of $8,500 for 12 months, emphasizing that the short loan term would minimize interest costs while providing immediate access to expansion capital. Michael was attracted to the quick funding but was concerned about the high monthly payments and wanted to understand what would happen if he couldn't meet the aggressive payment schedule while operating his trucking business. The monthly payments seem high for my cash flow, Michael explained to Davis. What happens if trucking business conditions make it difficult to meet the $8,500 monthly payments on schedule? Davis became dismissive about payment concerns, claiming that successful trucking businesses always generated sufficient cash flow for vehicle title loan payments, and that the short loan term actually saved money compared to longer-term financing. Mr. Peterson, established trucking companies generate consistent cash flow that easily supports vehicle title loan payments. Davis insisted with apparent trucking industry knowledge and cash flow assessment expertise. The 12-month term saves you thousands in interest compared to longer-term equipment financing, making this the most cost-effective expansion capital available. Davis also warned that missing payments would result in immediate vehicle repossession and that Michael's trucking business would lose essential fleet assets if he couldn't maintain the payment schedule. Michael felt pressured by the repossession threats, but realized that losing his existing trucks would destroy his business rather than enabling expansion through additional vehicle purchases. Michael decided to calculate the total loan costs and research commercial vehicle financing alternatives before risking his essential business assets through title lending. Michael discovered that the annual percentage rate for the title loan exceeded 150%, and that legitimate commercial vehicle financing offered much lower rates with payment terms that matched trucking industry cash flow patterns. Michael also learned that vehicle title loans often resulted in repossession when businesses couldn't meet aggressive payment schedules, and that losing collateral vehicles could destroy transportation businesses rather than providing expansion capital. Michael realized that commercial vehicle capital was using predatory title lending designed to trap transportation businesses in payment schedules that often resulted in vehicle repossession and business failure. Michael contacted Davis to decline the title loan, but Davis became aggressive and claimed that Michael was missing a rare opportunity for immediate expansion capital that wouldn't be available through traditional lenders. Michael reported the predatory commercial vehicle title lending to his state's lending regulatory agency and the Consumer Financial Protection Bureau. He learned that title lending scams often targeted transportation businesses with promises of quick expansion capital. The authorities explained that legitimate commercial vehicle financing provided reasonable payment terms that matched business cash flow patterns rather than aggressive schedules designed to create repossession opportunities. Michael obtained fleet expansion financing through an SBA-approved lender that provided reasonable payment terms and allowed him to grow his trucking business without risking his existing fleet through predatory title lending. The experience taught Michael to calculate total financing costs and to be suspicious of lenders offering quick approval while requiring essential business assets as collateral for aggressive payment schedules. Michael now educates other trucking company owners about vehicle title loan traps and emphasizes the importance of protecting essential business assets rather than risking them for supposedly quick expansion capital. Jennifer, a 32-year-old retail store owner, was managing cash flow challenges when she encountered a service that would test her knowledge of legitimate merchant financing and teach her valuable lessons about merchant cash advance scams targeting small retailers. The service promised immediate cash based on her credit card sales volume. Jennifer's boutique clothing store experienced seasonal cash flow variations, and she needed $30,000 to purchase spring inventory while managing winter sales decline, making immediate funding based on future sales seem attractive for inventory management. The service, Retail Cash Advance Solutions, specialized in providing immediate cash to retail businesses based on credit card sales history and promised funding within 24 hours without requiring traditional business loan documentation. Jennifer spoke with merchant finance specialist Wilson, who immediately offered to provide $30,000 based on her store's credit card processing volume, with automatic repayment through daily credit card sales deductions. Ms. Chun, your retail store's credit card processing history qualifies you for immediate merchant cash advance funding, Wilson said with apparent retail industry expertise and sales volume assessment knowledge. Merchant cash advances provide immediate inventory capital based on your proven sales performance rather than requiring traditional business loan analysis. Wilson explained that the merchant cash advance would be repaid through automatic deductions of 18% of her daily credit card sales until the advance plus fees was completely repaid, which seemed manageable based on her sales patterns. Ms. Chun Automatic repayment through daily sales deductions ensures that payments match your actual business performance and cash flow. Wilson continued with apparent payment flexibility knowledge and cash flow matching expertise. The 18% daily deduction rate adjusts automatically to your sales volume, providing payment flexibility during slower sales periods. Wilson emphasized that the total repayment amount would be $42,000, representing a $12,000 fee that seemed reasonable for immediate access to inventory funding without traditional loan requirements. Jennifer was interested in sales-based repayment, but wanted to understand how the daily deductions would affect her cash flow during slower sales periods when she needed money for operating expenses. "I'm concerned about how the daily deductions will affect my cash flow during slow sales periods," Jennifer explained to Wilson. "Will the 18% deduction continue even when I need cash for rent and other operating expenses?" Wilson became dismissive about cash flow concerns, claiming that successful retail businesses always generated sufficient sales to support merchant cash advance repayment while maintaining adequate operating capital. Ms. Chun, established retail stores generate consistent credit card sales that easily support merchant cash advance deductions while maintaining sufficient operating cash flow. Wilson insisted with apparent retail success knowledge and cash flow adequacy expertise. The automatic deduction system ensures that payments match your sales performance without creating cash flow problems. Wilson also claimed that the merchant cash advance was not technically a loan and therefore didn't have the same regulatory protections as traditional business lending, making it more flexible for retail businesses. Jennifer felt concerned about Wilson's dismissal of cash flow issues, but was pressured by her inventory purchase deadlines and the promise of immediate funding without traditional loan documentation. Jennifer decided to calculate the actual cost of the merchant cash advance and research alternatives before committing to daily sales deductions that could affect her operating cash flow. Jennifer calculated that the merchant cash advance represented an annual percentage rate of over 200% and that the daily deductions could consume most of her cash flow during slower sales periods. Jennifer also learned that merchant cash advances often created cash flow problems that forced businesses into additional advances, creating debt cycles that were difficult to escape. Jennifer realized that retail cash advance solutions was using predatory merchant financing that could trap her retail business in expensive debt cycles while consuming her daily cash flow. Jennifer contacted Wilson to decline the merchant cash advance, but Wilson became aggressive and claimed that Jennifer was missing essential inventory funding that would damage her retail business competitiveness. Jennifer reported the predatory merchant cash advance practices to her state's lending regulatory agency and the Federal Trade Commission. She learned that merchant cash advance scams often targeted retail businesses with immediate funding promises. The authorities explained that merchant cash advances often carried extremely high costs, and that daily deduction schedules could create cash flow problems that harmed rather than helped small retail businesses. Jennifer obtained inventory financing through a traditional business line of credit that provided reasonable interest rates and payment flexibility that matched her seasonal sales patterns without consuming daily cash flow. The experience taught Jennifer to calculate financing costs as annual percentage rates and to be cautious of lenders claiming payment flexibility while imposing daily deductions that could harm business cash flow. Jennifer now educates other retail business owners about merchant cash advance traps and emphasizes the importance of protecting daily cash flow rather than accepting expensive financing that promises immediate funding. Daniel, a 39-year-old manufacturing business owner, was seeking equipment financing when he encountered a broker that would test his understanding of legitimate equipment leasing and teach him valuable lessons about fake equipment leasing scams targeting manufacturers. The broker promised immediate equipment approval through specialized manufacturing leasing programs. Daniel needed new manufacturing equipment worth $65,000 to fulfill larger contracts, but wanted leasing options that would preserve his cash flow while providing access to updated machinery for production expansion. The broker, Industrial Equipment Leasing Partners, specialized in manufacturing equipment leasing and promised immediate approval for industrial machinery through their network of specialized equipment financing companies. Daniel spoke with equipment leasing manager Rodriguez, who immediately claimed that Daniel's manufacturing business qualified for specialized leasing programs designed specifically for production equipment and industrial machinery. Mr. Harrison, manufacturing businesses qualify for specialized equipment leasing programs that understand industrial production needs, Rodriguez said, with apparent manufacturing expertise and industrial leasing knowledge. Our leasing partners specialize in production equipment and provide terms that match manufacturing cash flow patterns and equipment utilization cycles. Rodriguez explained that the equipment leasing approval required a broker fee of $2,600 to cover application processing with multiple leasing companies and coordination of competitive lease proposals tailored to manufacturing equipment needs. Mr. Harrison, industrial equipment leasing involves specialized underwriting that requires coordination with multiple leasing partners to secure the best available terms. Rodriguez continued with apparent leasing coordination knowledge and competitive proposal expertise. The broker fee covers all costs associated with presenting your manufacturing business to our specialized equipment leasing network. Rodriguez promised that Daniel would receive multiple competitive lease proposals within 48 hours of paying the broker fee, and that the leasing terms would be significantly better than he could obtain through direct contact with equipment leasing companies. Daniel was interested in specialized manufacturing leasing, but wanted to verify the broker's credentials and leasing partner network before paying substantial broker fees for equipment financing coordination. I want to verify your leasing partner network before paying the broker fee, Daniel explained to Rodriguez. Can you provide information about the specific leasing companies and their manufacturing equipment specialization? Rodriguez became evasive when Daniel requested leasing partner information, claiming that equipment leasing networks maintained confidentiality agreements that prevented disclosure of specific partner information until broker agreements were completed. Mr. Harrison, equipment leasing networks operate under strict confidentiality protocols that protect competitive lease terms and prevent unauthorized contact with specialized leasing partners. Rodriguez insisted with apparent confidentiality requirements and competitive protection procedures. This confidentiality ensures that you receive exclusive access to manufacturing equipment leasing programs not available through direct contact. Rodriguez also claimed that attempting to contact leasing partners directly would disqualify Daniel from the specialized manufacturing programs, and that working through industrial equipment leasing partners was essential for accessing competitive equipment leasing terms. Daniel felt suspicious about the confidentiality claims, but was pressured by his equipment delivery deadlines and Rodriguez's assurance about exclusive access to manufacturing equipment leasing programs. Daniel decided to research equipment leasing brokers and verify legitimate leasing practices before paying broker fees for coordination services that seemed to lack transparency about actual leasing partners. Daniel contacted several equipment leasing companies directly and discovered that most worked directly with manufacturers without requiring broker fees, and that specialized manufacturing leasing was widely available without broker coordination. Daniel also learned that legitimate equipment leasing brokers typically earned commissions from successful lease placements rather than charging upfront broker fees for application coordination services. Daniel realized that Industrial Equipment Leasing Partners was operating a fake leasing broker scam by collecting broker fees while having no actual leasing partner network or ability to arrange the promised manufacturing equipment leasing. Daniel contacted Rodriguez to inform him about the direct leasing availability, but Rodriguez claimed that direct contact would prevent access to the specialized terms available only through their exclusive broker network. Daniel reported the fake equipment leasing broker scam to the Federal Trade Commission and his state's business regulatory agency. He learned that leasing broker scams often targeted manufacturing businesses seeking specialized equipment financing. The authorities explained that legitimate equipment leasing was widely available directly from leasing companies and that exclusive broker access claims were often used to justify fraudulent advance fee collection. Daniel obtained equipment leasing directly from a manufacturer-approved leasing company that provided competitive terms without broker fees, enabling his production expansion with appropriate payment terms. The experience taught Daniel to contact equipment leasing companies directly and to be suspicious of brokers claiming exclusive access while requiring upfront fees for coordination services. Daniel now educates other manufacturers about fake equipment leasing broker scams and emphasizes the importance of working directly with established leasing companies rather than paying brokers claiming specialized access to manufacturing equipment financing. Lisa, a 33-year-old franchise owner, was seeking expansion capital when she encountered a lender that would test her knowledge of legitimate franchise financing and teach her valuable lessons about franchise loan scams targeting successful business owners. The lender claimed specialized knowledge of franchise business models and guaranteed expansion funding. Lisa owned a successful hair salon franchise and wanted to open a second location, requiring $55,000 for franchise fees, equipment, and working capital to establish the new salon in a growing suburban market. The lender, Franchise Expansion Capital, specialized in franchise business lending and advertised guaranteed funding for proven franchise concepts. Franchise expertise ensures approval, which seemed ideal for her expansion needs. Lisa spoke with Franchise Finance Director Adams, who immediately expressed familiarity with her salon franchise brand and claimed specialized knowledge of hair salon business models and expansion requirements. Ms. Turner, hair salon franchises represent excellent investment opportunities with proven business models that our franchise lending program specifically supports, Adams said with apparent franchise expertise and hair salon industry knowledge. Successful franchise owners like yourself qualify for guaranteed expansion funding because franchises have established success patterns that traditional lenders often don't understand. Adams explained that franchise lending differed from traditional business loans because franchises had corporate support and proven business systems that reduced lending risk and enabled guaranteed approval for qualified franchise owners. Ms. Turner, franchise expansion lending provides guaranteed approval because franchise business models eliminate the uncertainty that traditional lenders face with independent businesses. Adams continued with apparent franchise advantage knowledge and lending risk reduction expertise. Your existing franchise success demonstrates the business model viability that guarantees approval for expansion capital. Adams offered to provide the $55,000 expansion funding for an application fee of $2,750 that would cover franchise business analysis, corporate verification, and coordination with specialized franchise lending partners. Lisa was interested in franchise specialized lending, but wanted to verify Adams's knowledge of her franchise system and confirm the legitimacy of the specialized lending program before paying substantial application fees. I want to verify your familiarity with my franchise system before proceeding, Lisa explained to Adams. Can you tell me about the specific support and requirements provided by my franchise corporate office? Adams became vague when Lisa asked specific franchise questions, providing only general information about franchise systems that could apply to any franchise concept rather than demonstrating detailed knowledge of her specific hair salon franchise. Ms. Turner, franchise lending programs work with multiple franchise systems and focus on the general franchise advantages rather than specific brand details. Adams insisted with apparent multi-franchise expertise and general system knowledge. The guaranteed approval is based on franchise concept strengths that apply across all established franchise brands. Adams also claimed that detailed franchise knowledge wasn't necessary because franchise expansion capital worked directly with franchise corporate offices to verify business models and support systems. Lisa felt suspicious about Adams's lack of specific franchise knowledge and decided to research franchise lending practices before paying application fees for supposedly specialized franchise expertise. Lisa contacted her franchise corporate office to inquire about recommended lenders and learned that they maintained a list of approved franchise lenders who didn't require application fees for qualified franchise owners. Lisa also discovered that legitimate franchise lenders typically had detailed knowledge of specific franchise systems and worked directly with corporate offices to provide streamlined approval processes. Lisa realized that Franchise Expansion Capital was using general franchise knowledge to appear specialized while operating an advanced fee scam, targeting successful franchise owners seeking expansion capital. Lisa contacted Adams to inform him about the franchise corporate office recommendations, but Adams claimed that his specialized program provided better terms than corporate recommended lenders. Lisa reported the franchise lending scam to her franchise corporate office and the Federal Trade Commission. She learned that franchise loan scams often targeted successful franchise owners with promises of specialized knowledge and guaranteed approval. The authorities explained that legitimate franchise lenders worked closely with franchise systems and provided actual funding without requiring upfront application fees for supposedly specialized franchise expertise. Lisa obtained expansion funding through a franchise corporate-approved lender that demonstrated genuine franchise knowledge and provided competitive terms without application fees. The experience taught Lisa to verify lender knowledge through specific franchise questions and to work with corporate-recommended lenders rather than paying fees to companies claiming specialized franchise expertise. Lisa now educates other franchise owners about franchise lending scams and emphasizes the importance of using corporate-approved lenders who demonstrate genuine franchise system knowledge and industry expertise. Carlos, a 35-year-old import business owner, was seeking trade financing when he encountered a broker that would test his understanding of legitimate international trade finance and teach him valuable lessons about trade finance scams targeting import businesses. The broker claimed connections to international trade finance specialists. Carlos's import business needed $40,000 in trade financing to purchase inventory from overseas suppliers and wanted specialized lending that understood international trade cycles and payment timing challenges. The broker, Global Trade Finance Solutions, specialized in international trade financing and advertised Worldwide Trade Finance Network, import-export expertise, financing for international business growth, which seemed perfect for his import business needs. Carlos spoke with international trade specialist Martinez, who immediately claimed extensive experience with import business financing and connections to specialized trade finance providers who understood international business requirements. Mr. Delgado, import businesses require specialized financing that understands international trade cycles and payment timing, Martinez said with apparent international trade expertise and import business knowledge. Our global trade finance network provides capital specifically designed for import businesses dealing with overseas suppliers and international payment schedules. Martinez explained that international trade financing involved complex documentation and regulatory compliance that required specialized broker services to coordinate with qualified trade finance providers who understood import business requirements. Mr. Delgado, international trade finance involves specialized documentation and compliance requirements that require expert coordination with qualified trade finance providers. Martinez continued with apparent compliance expertise and documentation knowledge. Our broker services ensure that your import business receives appropriate financing that meets international trade regulations and supplier payment requirements. Martinez requested a broker fee of $2,200 to cover trade finance coordination, international compliance analysis, and presentation of Carlos's import business to specialized trade finance providers in their global network. Carlos was interested in specialized trade financing, but wanted to verify Martinez's international trade expertise and confirm the existence of the specialized trade finance provider network before paying broker fees. I want to understand more about international trade regulations and your trade finance provider network, Carlos explained to Martinez. Can you demonstrate your expertise with import compliance and specific trade finance providers? Martinez became vague when Carlos asked detailed trade questions, providing only general information about international business that lacked specific knowledge of import regulations, documentation requirements, or actual trade finance procedures. Mr. Delgado, international trade finance involves complex regulations that vary by country and product type. Martinez insisted with apparent complexity knowledge while avoiding specific regulatory details. Our broker services handle all compliance requirements and coordinate with trade finance providers who specialize in your specific import business needs. Martinez also claimed that detailed trade finance information was proprietary and that specific provider information was only available after completing the broker agreement and paying coordination fees. Carlos felt suspicious about Martinez's lack of specific trade knowledge and decided to research international trade financing directly before paying broker fees for supposedly specialized coordination services. Carlos contacted the Export-Import Bank and Trade Finance departments at major banks to inquire about import business financing and learned that legitimate trade finance was widely available without requiring specialized broker coordination. Carlos also discovered that legitimate trade finance providers typically had detailed knowledge of import regulations and worked directly with import businesses without requiring broker fees for coordination services. Carlos realized that Global Trade Finance Solutions was using general international business language to appear specialized while operating a broker fee scam targeting import businesses seeking specialized trade financing. Carlos contacted Martinez to inform him about the direct trade finance availability, but Martinez claimed that direct contact would prevent access to the specialized terms available only through their global trade finance network. Carlos reported the trade finance broker scam to the Export-Import Bank and the Federal Trade Commission. He learned that trade finance scams often targeted import businesses with promises of specialized international expertise. The authorities explained that legitimate trade financing was available directly from banks and trade finance institutions that provided genuine international expertise without requiring broker coordination fees. Carlos obtained trade financing directly from a bank's trade finance department that demonstrated actual import business knowledge and provided competitive terms without broker fees. The experience taught Carlos to verify international trade expertise through specific regulatory questions and to work directly with established trade finance institutions rather than paying brokers claiming specialized global connections. Carlos now educates other import business owners about trade finance broker scams and emphasizes the importance of working directly with qualified trade finance institutions that demonstrate genuine international business expertise. Michelle, a 31-year-old technology startup founder, was seeking venture funding when she encountered an investor that would test her knowledge of legitimate startup investment and teach her valuable lessons about fake venture capital scams targeting tech entrepreneurs. The investor claimed connections to Silicon Valley venture capital firms. Michelle had developed a software application and needed $100,000 in startup funding to complete development and launch her technology platform, seeking investors who understood software development and technology market opportunities. The investor, Silicon Valley Startup Ventures, specialized in early-stage technology investments and advertised venture capital connections. Silicon Valley expertise. Funding for innovative tech startups, which seemed ideal for her software development needs. Michelle spoke with venture capital partner Johnson, who immediately expressed interest in her software concept and claimed extensive connections with Silicon Valley venture capital firms specializing in technology startup investments. Ms. Foster, your software application represents exactly the type of innovative technology that our Silicon Valley venture capital partners actively seek for investment, Johnson said with apparent venture capital expertise and technology investment knowledge. Early-stage software platforms with strong market potential qualify for immediate venture capital consideration through our specialized investment network. Johnson explained that venture capital investment required extensive due diligence and legal documentation that necessitated upfront fees to cover investment analysis, legal preparation, and coordination with qualified venture capital firms. Ms. Foster, venture capital investment involves comprehensive due diligence and legal documentation that requires specialized preparation before presentation to qualified investment partners. Johnson continued with apparent due diligence expertise and legal preparation knowledge. The preparation fees cover all costs associated with professional investment package development and coordination with our venture capital network. Johnson requested preparation fees of $4,500 to cover investment analysis, legal documentation, and presentation coordination with Silicon Valley venture capital firms who would review Michelle's software startup for potential investment. Michelle was excited about venture capital interest, but wanted to verify Johnson's connections to actual Silicon Valley firms before paying substantial preparation fees for investment services. I'd like to verify your venture capital connections before paying preparation fees, Michelle explained to Johnson. Can you provide information about specific venture capital firms and successful investments they've made through your coordination? Johnson became evasive when Michelle requested specific venture capital information. claiming that investment partnerships maintained strict confidentiality and that detailed firm information was only available after completing preparation agreements. Ms. Foster, venture capital partnerships operate under strict confidentiality protocols that prevent disclosure of specific firm information until preparation agreements are completed. Johnson insisted with apparent confidentiality requirements and investment protection procedures. This confidentiality ensures that innovative startups receive exclusive consideration from qualified venture capital partners. Johnson also claimed that attempting to contact venture capital firms directly would disqualify Michelle from the specialized startup investment programs available only through Silicon Valley Startup Ventures Coordination. Michelle felt suspicious about the confidentiality claims, but was pressured by her development timeline and Johnson's assurance about exclusive access to Silicon Valley venture capital investment. Michelle decided to research venture capital practices and verify legitimate investment procedures before paying preparation fees for investment coordination services that seemed to lack transparency about actual investors. Michelle contacted several legitimate venture capital firms directly and learned that most accepted startup pitches without requiring upfront preparation fees, and that venture capital investment involved transparent procedures rather than confidential coordination services. Michelle also discovered that legitimate venture capital firms typically had detailed online information about their investment focus and portfolio companies, and that confidentiality didn't prevent basic verification of firm credentials. Michelle realized that Silicon Valley Startup Ventures was operating a fake venture capital scam by collecting preparation fees while having no actual connections to legitimate venture capital firms or investment opportunities. Michelle contacted Johnson to inform him about the direct venture capital accessibility, but Johnson claimed that direct contact would prevent access to the specialized investment consideration available only through their exclusive coordination network. Michelle reported the fake venture capital scam to the Securities and Exchange Commission and the Federal Trade Commission. She learned that investment scams often targeted startup founders with promises of exclusive venture capital access. The authorities explained that legitimate venture capital investment involved transparent procedures and that startup founders should work directly with registered investment firms rather than paying coordination fees to intermediaries. Michelle obtained startup funding through a legitimate venture capital firm that provided actual investment after proper due diligence procedures without requiring upfront preparation fees. The experience taught Michelle to verify investment firm credentials directly and to be suspicious of intermediaries claiming exclusive access while requiring upfront fees for investment coordination services. Michelle now educates other technology entrepreneurs about fake venture capital scams and emphasizes the importance of working directly with legitimate investment firms rather than paying intermediaries claiming specialized investor connections. Stephen, a 38-year-old food truck owner, was seeking mobile business expansion funding when he encountered a lender that would test his understanding of legitimate mobile business financing and teach him valuable lessons about mobile business loan scams targeting food service entrepreneurs. The lender claimed specialized knowledge of food truck business models. Stephen operated a successful food truck and wanted to purchase 2 additional trucks to expand into different neighborhoods, requiring $90,000 for vehicle purchases, equipment installation, and permits for mobile food service expansion. The lender, Mobile Food Business Capital, specialized in food truck financing and advertised food truck expertise. Mobile business specialists. Funding for food service expansion, which seemed perfect for his mobile food business growth plans. Stephen spoke with mobile business specialist Davis, who immediately claimed detailed knowledge of food truck operations and specialized understanding of mobile food service business challenges and opportunities. Mr. Jackson, food truck businesses require specialized financing that understands mobile operations, permit requirements, and location-based revenue patterns, Davis said with apparent food truck expertise and mobile business knowledge. Our mobile food business lending program provides capital specifically designed for food truck expansion and multi-location mobile operations. Davis explained that food truck financing involved unique considerations including vehicle specifications, equipment requirements, and permit compliance that required specialized lending expertise not available through traditional business loans. Mr. Jackson, Food truck expansion involves specialized vehicle requirements and permit compliance that traditional business lenders don't understand. Davis continued with apparent mobile food service knowledge and expansion expertise. Our lending program provides capital that covers vehicle purchases, equipment installation, and permit requirements for successful food truck expansion. Davis offered to provide the $90,000 expansion funding for an underwriting fee of $3,600 that would cover mobile business analysis, permit verification, and coordination with specialized food service equipment lenders. Stephen was interested in specialized food truck lending, but wanted to verify Davis's knowledge of food service regulations and mobile business requirements before paying underwriting fees for supposedly specialized expertise. I want to verify your knowledge of food service regulations and permit requirements, Stephen explained to Davis. Can you tell me about specific health department requirements and mobile food service compliance issues? Davis became vague when Stephen asked specific regulatory questions, providing only general information about food service that lacked detailed knowledge of health department regulations, permit processes, or actual mobile food service compliance requirements. Mr. Jackson, food service regulations vary by location and require specialized analysis that our underwriting process handles for each expansion project. Davis insisted with apparent regulatory complexity while avoiding specific compliance details. Our mobile business lending program coordinates with local authorities to ensure that expansion projects meet all regulatory requirements. Davis also claimed that detailed regulatory information was proprietary and that specific compliance details were only available after completing the underwriting process and paying analysis fees. Stephen felt suspicious about Davis's lack of specific regulatory knowledge and decided to research mobile food service financing directly before paying underwriting fees for supposedly specialized food truck expertise. Stephen contacted the Small Business Administration and food service equipment lenders to inquire about food truck expansion financing and learned that legitimate mobile food service lending was available without requiring specialized underwriting fees. Stephen also discovered that legitimate food truck lenders typically had detailed knowledge of health department regulations and worked directly with mobile food service businesses without requiring upfront underwriting fees. Stephen realized that Mobile Food Business Capital was using general food service language to appear specialized while operating an underwriting fee scam targeting food truck owners seeking expansion capital. Stephen contacted Davis to inform him about the direct food truck financing availability, but Davis claimed that direct contact would prevent access to the specialized terms available only through their mobile food business lending program. Stephen reported the mobile food business lending scam to the Small Business Administration and the Federal Trade Commission. He learned that specialized business lending scams often targeted niche businesses with promises of industry-specific expertise. The authorities explained that legitimate mobile food service financing was available through established lenders who demonstrated genuine food service knowledge without requiring upfront underwriting fees for supposedly specialized analysis. Stephen obtained food truck expansion financing through an SBA-approved lender that demonstrated actual food service knowledge and provided competitive terms without underwriting fees. The experience taught Stephen to verify industry expertise through specific regulatory questions and to work with established lenders rather than paying fees to companies claiming specialized mobile business knowledge. Stephen now educates other food truck owners about mobile business lending scams and emphasizes the importance of working with lenders who demonstrate genuine food service expertise without requiring upfront fees for specialized industry analysis. Rachel, a 36-year-old consulting business owner, was seeking working capital when she encountered a factoring company that would test her knowledge of legitimate invoice factoring and teach her valuable lessons about fake factoring scams targeting service businesses. The company promised immediate cash for her outstanding invoices. Rachel's management consulting business had $35,000 in outstanding client invoices and needed immediate cash flow to cover payroll and operating expenses while waiting for clients to pay their consulting fees over the next 60 to 90 days. The factoring company, Professional Services Factoring, specialized in consulting business invoice factoring and advertised immediate cash for invoices. Service business experts. Fast approval for consulting invoices, which seemed ideal for her cash flow needs. Rachel spoke with factoring specialist Rodriguez, who immediately offered to purchase her outstanding invoices for immediate cash and claimed specialized understanding of consulting business invoice patterns and client payment cycles. Ms. Anderson, consulting businesses with outstanding invoices qualify for immediate cash through our professional services factoring program, Rodriguez said with apparent consulting expertise and invoice factoring knowledge. Service business invoices represent excellent collateral for immediate cash advance because consulting clients have established payment patterns that ensure invoice collection. Rodriguez explained that invoice factoring provided immediate cash equal to 80% of invoice value, with the remaining 20% paid after client payment minus factoring fees, which seemed like reasonable terms for immediate cash flow relief. Ms. Anderson, professional services factoring provides immediate cash flow relief by advancing 80% of invoice value immediately and paying the remaining 20% after client payment. Rodriguez continued with apparent factoring process knowledge and cash flow benefits expertise. This arrangement provides immediate operating capital while ensuring that you receive full invoice value minus reasonable factoring fees. Rodriguez requested a factoring setup fee of $1,750 to cover invoice verification, client credit analysis, and establishment of the factoring account for ongoing consulting business invoice processing. Rachel was interested in invoice factoring, but wanted to verify the legitimacy of the factoring company and understand the actual factoring fees before paying setup costs for invoice processing services. I want to understand the total factoring costs and verify your company credentials, Rachel explained to Rodriguez. Can you provide detailed information about factoring fees and your company's factoring experience with consulting businesses? Rodriguez became evasive when Rachel requested detailed fee information and company credentials, providing only general information about factoring costs while avoiding specific fee calculations or company verification details. Ms. Anderson, factoring fees are calculated based on individual client credit profiles and invoice terms. Rodriguez insisted with apparent fee complexity while avoiding specific cost calculations. Our setup process includes comprehensive analysis that determines exact factoring costs based on your specific consulting business and client payment patterns. Rodriguez also claimed that factoring company credentials were proprietary information and that detailed company information was only available after completing factoring agreements and paying setup fees. Rachel felt suspicious about Rodriguez's evasiveness regarding fees and credentials and decided to research invoice factoring companies directly before paying setup fees for factoring services that seemed to lack transparency. Rachel contacted several legitimate factoring companies and learned that established factoring firms provided detailed fee schedules and company credentials without requiring setup fees for factoring account establishment. Rachel also discovered that legitimate invoice factoring involved transparent fee structures and that factoring companies typically earn money from factoring fees rather than upfront setup payments. Rachel realized that professional services factoring was operating a setup fee scam by collecting upfront payments while having no actual factoring capability or intent to purchase consulting business invoices. Rachel contacted Rodriguez to inform him about the legitimate factoring availability, but Rodriguez claimed that direct factoring companies didn't specialize in consulting businesses and couldn't provide the specialized services available through professional services factoring. Rachel reported the fake factoring scam to the Federal Trade Commission and her state's business regulatory agency. She learned that factoring scams often targeted service businesses with promises of immediate cash for outstanding invoices. The authorities explained that legitimate invoice factoring companies provided transparent fee structures and company credentials without requiring setup fees for factoring account establishment. Rachel obtained invoice factoring through a legitimate factoring company that provided actual cash advances with transparent fees and proper business credentials without requiring setup payments. The experience taught Rachel to verify factoring company credentials and fee structures before paying setup fees for factoring services that claimed specialized expertise with consulting business invoices. Rachel now educates other consulting business owners about fake factoring scams and emphasizes the importance of working with established factoring companies that provide transparent services without requiring upfront setup fees.